Rob Hamilton of AnchorWatch. Welcome to the Why Bitcoin Show.
Well, hello. Thanks for having me.
Thanks so much for coming through, Rob. We've got a lot of ground to cover today, and as I mentioned briefly before we click record, most folks when they hear insurance, that it's like their eyes roll over. It's like kind of a grudge purchase, whether it's house or pet or whatever the case may be. But Bitcoin insurance suddenly it's unique, it's interesting, and people go, well, their ears prick up and they go like, that might be something that could benefit me, quite frankly. So, in prior to us even chatting, I had discussed with a couple of folks, and they were like, "Geez, I'd love to hear more about that product." So we're definitely going to dive into that. But I thought perhaps just because you've probably had this sort of interview half a dozen times, if not maybe 100 times, um, and you're going to repeat yourself like 1,000 times. Let's start off with like something a little bit light and fun. And I saw you weighing in even briefly on Twitter the other day. Are you into lifting heavy weights and creatine? I mean, just to get that out the way.
Ah, yeah. Yes. My gym routine is heavy compound lifts, squat, deadlift, uh, bench press, overhead press. Few reps. Just kind of doing large compound exercises that hit the whole body. And on the creatine side, I thought it was funny because for years I've just taken like a little bit of creatine every day, just like
Yeah.
mixing it with some water, nothing, whatever. And it's funny. I feel like the internet is just like a circle, and this is like 2010, 2012, like bodybuilding forum era, like memes coming back around in full circle, and like Bitcoin Twitter discovered it. So I obviously went to the extreme and was talking about how I don't know how everyone's getting their 5 to 8 kilograms of creatine in a day because I'm drinking so much water and I'm not even halfway done, right? Just absurdly leading into it. But yeah, just like having fun with it because it's one of these things that just finding silly, fun, irreverent, just like jokes, just to have fun on the
Of
internet.
course, of course. No, it is really funny to me because I've been training for ages, and creatine's always been like a pretty staple aspect of what I'm doing, and it's relatively uncontroversial. I don't think I was aware of
Right.
all the, I guess, all the benefits outside of obviously like what it would do
The
to sort of,
cognition.
yeah, the cognitive benefits. I think that was surprising
Mhm.
to me to learn more and more about that. And to just sort of put a bow on this little topic, any metabolic conditioning, because I think I've done quite a bit of reading about how folks now I've crossed over into the 40s. The real optimal combination is doing, the compound lifting, which I also do, and then metabolic conditioning 2 or 3 times a week, like, some sort of 20 minutes of high intensity interval training, something like that.
Mhm.
Yeah.
Yeah, yeah, definitely spikes of cardio. Also, I think that long windows of intermittent fasting are just really nice too. If I'm just, depending on your life, your circumstance, schedules, and all of that, you can't always do multi-day fast in the middle of the week. But like, trying to tightly have it, maybe like I skip breakfast most days, and eat at 1 o'clock, and have dinner by 7. Have like a 6 hour window where I'm eating, and then not eating before bed, like basic things like that. You just realize that are like kind of like easy hacks to just kind of really just improve your day-to-day routine.
Yeah.
And many multifaceted, but yeah.
Absolutely. And do you think that requires discipline, or is that something you just developed over time in terms of the fasting? Because I would love to skip breakfast, but it's like my favorite meal of the day.
It's less of a habit. Well, it's more of just like a natural habit that gets built, and less of like a explicit discipline. Maybe for a little bit here and there, like it requires discipline, especially if you're off, like you're not adhering to lifting or cardio, like whatever you're doing. It takes a little bit to get like push past the inertia and get back into it. But
Mm.
for me, it's just kind of usually I'm so busy that I have things going on where if maybe I have downtime, I'll be more like, oh, I'll have breakfast. Like it's like more like kind of casual and relaxed. But I'm by no means a fitness or health guru
Oh,
by
well.
any means. So I'm just I wouldn't take my perspective as anything meaningful.
Well, I mean, yeah, those are some good insights, and thanks for sharing. Because I thought it'd be nice to just touch on that before we dive
Sure.
into to AnchorWatch. So, you originally were a data scientist, as I understand, and you've subsequently now founded AnchorWatch. I'd love for you to just dive into a little bit about the background as to kind of how your background as a data scientist has helped you kind of create a product. What actual gap in the market did you see that it would be fulfilling, etc.?
Yeah, I'll actually even go one step further back. in 2013, I had a bunch of buddies that at the time I wasn't a programmer at all. I had a bunch of buddies that were ironically mining Dogecoin, and I had several of my buddies who knew I was a Ron Paul and the Fed guy. Like they knew that was my political leaning, and they're like, "You should check out Bitcoin." I'm like, "Yeah, I'll check out Bitcoin, whatever. I'll get around." Like everyone's the first time you hear it, you ignore it, and the kind of inflection point was that a bunch of buddies mining Dogecoin. Ironically, I was like, okay, I see. This is like a joke. Like it's doing a little parody. Let me go. All right, I'll turn on my computer, and all of a sudden I'm mining Dogecoin with my computer. I'm like, oh, this is funny. Okay, cool. I get this is like a performance art piece of like a joke. Let me go learn about how this thing actually works. And I was living in the New York City area at the time, and I went to New York City Bit Devs in 2013, and went there a couple times and was just really blown away by what I could tell was just people who were very intelligent and earnestly working through hard problems and understanding how this whole Bitcoin thing works on the technical level. And that's what inspired me to learn how to program, over a decade ago.
Mm.
From that, I was working in traditional, just kind of like digital advertising stuff. That's kind of what I fell out of. I had a whole stint as a competitive video game referee. That was kind of my first job out of college, was working at Major League Gaming. Um, Kind of cutting my teeth in the corporate professional environment there, but early stage startup. And then I started over time writing more and more code to automate my work, like little like macros, and then it turned into like scripts and Python. And all of a sudden, I was like writing more and more code. And I basically self-taught took a lot of time to just harden those skills. I went to go work at IBM as a strictly not as, as a data scientist. I went to work at IBM as a managing consultant, and then took basically a year off to do like a full-on time like coding boot camp to like learn much more full focus. Like I'm gonna not just kind of hobbyist program, I'm gonna deeply just kind of like make my full-time commitment and skilling up and being able to program. And then from there, I got hired back at IBM as a data scientist. I did that for a little over a year. And we have now gone over my past decade to now we are in 2022, 2021. I quit my job at IBM. Uh, and I was like, I'm going to spend time with my family, had kids. And I very quickly started getting stir crazy. Started getting really stir crazy, wanted to do something. And in February, March of 2022, the idea for AnchorWatch came up and kind of ran off to the races from there. So for that whole time, that whole 10-year arc, I was following Bitcoin, was going to BitDevs and going to meetups, was never really Bitcoin forward of like a personality or anything like that, wasn't going on podcasts, but was aware, just around.
Mm.
And so the idea of AnchorWatch, the premise was someone said, Rob, I was starting to think about maybe getting a job in Bitcoin because I was looking for work. I knew a lot about Bitcoin. And someone told me it was actually American Hoddle, if you know him.
Of
He told me, he
course.
said, Rob, you're kind of really knowledgeable and maybe you should start a company instead of working for a company. And I said, well, if I'm going to like do that, I want it to be a big problem that no one's really working on, has a large addressable market, kind of really big foundational impact for Bitcoin. And the idea of insurance came up, and kind of that's where the AnchorWatch story starts. And so the real gap in the market here, it's multifaceted across many fronts, but the way Bitcoin just works today, in self-custody and kind of all of these practices came out of self-custody, what you're doing is what in insurance is called self-insuring. Self-insuring meaning I'm holding all the risk. If I screw up, I have to bear that loss, right? As opposed to like risk transferring, where I buy a car, I have the car, I buy car insurance, and I get into a car accident. That risk of having to pay for a new car gets transferred to the car insurance company, right? And so structurally, there was really not a good risk transference vehicle for Bitcoin, like an insurance vehicle at all for Bitcoin, where you would have nothing, or what you would have is like at large custodians, you'd have these omnibus packages that are structured in such a way that they are fractions of a fraction of a penny of the overall coverage. You, as the customer, may not even be on the list of people who get that insurance payout. A lot of very large holders who keep their coins at different exchanges and custodians have preferred liquidity clauses saying, if I'm going to give you this much money and there's a problem, I get first payout of the liabilities, right? You as a pleb don't have that. Right. So like there's just and this is all obfuscated around marketing. Oh, we have an insurance policy, right?
Yeah.
Or like it's not really anything meaningful to you. And the ultimate premise was that if you're paying for custody, the ideal relationship of that should be, if I'm paying you to hold my Bitcoin for me, in the event something goes wrong, I should not just get a oops, I'm sorry. I should be able to get my money back,
Yeah.
right? And so this was the premise around AnchorWatch, where custody fees should start looking more like insurance premiums. If you're in the universe of actually paying for the service, you should actually get an insurance.
As you may know, I've partnered with the legends at Bitcoin Mentor, headed by BTC Sessions, to look after the Australian market. And we're laser focused on helping you get your coins off of exchange and into self custody. Wherever you are in your journey, whether you're just getting started or you're advanced and you're looking to up your game, we've got the skills, knowledge, and experience to get you on your way towards true ownership and sovereignty. Personally, I believe that if you require cooperation or permission from any third party to move your coins, then you're not really self sovereign and you don't actually truly own your own Bitcoin. In fact, in that case, I think you may as well just own the ETF. Self custody isn't as difficult as some people make it out to be, and I'm very passionate about helping people who care about sovereignty take control of their Bitcoin. If you're interested in finding out more about how we can help you, hit me up at dale@bitcoinmentor.io, or you can book a session with me. The link is in the show notes. Now, back to the show.
And so around this kind of goes down two different paths: the insurance piece and the technology piece. Um, AnchorWatch today, we launched in January. It took us 2.5 years to go through all of the mechanics of not only building out the tech, but also building the right relationship and understanding the right product design to get the reinsurance. Um, so to start, I'll start on the insurance side at a very
Yeah.
high level, and then we'll talk about the tech, because the tech is also really interesting just on a pure Bitcoin software side. So we are what's called a Lloyd's of London cover holder. What that means is we are direct agents of Lloyd's of London. We are responsible for the distribution, the sales of the insurance policy. We do the underwriting. We administer the program, which includes our tech and kind of the whole vehicle. But when you get a policy from AnchorWatch, it may be an AnchorWatch policy, but more importantly, it's on Lloyd's of London paper. It is a Lloyd's of London insurance policy. And I could do a whole sidebar about Lloyd's of London, but as kind of the largest and oldest reinsurance market in the world, they're the most prestigious name when it comes to insurance in general.
Sorry, can I
And
interrupt there?
so please do.
Reinsurance being insurance for insurers, correct?
Correct.
Okay, there we go.
Yeah.
Sorry.
Yeah. No, that's exactly right. So there's different ways. This goes into all of basically insurance at the end of the day is like an investment. It's investment banking. It's investment. You're placing money instead of maybe into companies, you're placing into risk. And the way I describe Lloyd's of London is think the New York Stock Exchange with all of the stock tickers and the people on the floor, mostly computers now, right? But like you're trading equity, right? You're trading stocks back and forth. Lloyd's of London is the same way, but instead of trading stocks, they're trading risk, right? So you can, I have homeowners insurance across the United States, or I have car insurance in Europe, right? Like all of these different kinds of risk and all these different geographic like breakdowns and all these different kind of weird things all have like risk markets.
Yeah.
And so, um, because we are a Lloyd's of London cover holder, we have the authority to issue policies. We're not doing a bunch of one-off deals. You can walk in the door, we can get you a policy, you're signed and bound, and we're able to do that kind of at scale efficiently. And we our minimum policy size is 250,000 US dollars. Our maximum policy size is $100 million. So we can do a $100 million policy for anyone walking in. And this kind of starts tying over into the tech. Now, I'm also happy to go down the insurance path. It's funny because most people kind of eye roll or groan about insurance. Most people's interaction with insurance on a day-to-day basis is like a government compelled one or a market compelled one,
Yes.
right? And there's a difference there where like car insurance in the United States largely is required. If you have a car, if you have like if you're driving a car, you need to have car insurance. That's because the government says that. If you have a mortgage on your home, the bank requires you
Yes.
have home insurance, because if they're insuring $1 million home and your house burns down, they really don't have liquidity to make good on the loan, because you could just walk away from the loan and be like, all right, bank, you deal with it. But you need the home insurance there because in the event the house burns down, that there is a cash level payout that could recompensate them so that they're not underwater on the loan, right? And so
100%.
borrowing against things and insurance being there is like an interesting point. But that's not always strictly government enforced. That's just as a bank, I'm not going to hold the bag for your uninsured home, because now I have a liability where if that house burns up, as the bank lending you the dollars, I could lose a bunch of money. Right. So that's like a
Absolutely. You want
market forced
security.
one.
Yeah,
You want
exactly. You
security
won't
and
have
you insure the things you care about. Right. And you mentioned pet insurance. Like people, I have pet insurance on my dog. Like he got injured recently. And I went and did the math and I was like, I've effectively broken even so far over the course of my dog's life with the amount of money I saved when he had to get surgery. Right.
yes.
Um, now, like, it's just interesting. A lot of people like say insurance is fiat. And I can understand because people say it's government compelled. The Austrians, though, actually talk about insurance as the place for government, where you're going to have, like, in the world of like lower, less and less government, you want to have people able to step in to hold risk for you, right? And so insurance, I actually is part of like a world where there is less government influence. You will have insurance companies stepping in to provide services, and that's going to be part of your insurance contracts with them, right? And there's a whole spectrum of where you are in the anarcho-capitalist to libertarian spectrum of how deeply that goes. But ultimately, at the end of the day, it's a contract. It's a financial contract like anything else, right? It's going to contract law, and it's the way I actually line it up though is that for Bitcoin, it's skin in the game risk alignment.
Mm,
Whereas if I'm a custodian and something goes wrong, it's like, oh shit, that sucks, whatever. But like, um, heads I win, tails you lose. Either I collect a bunch of custody fees and you're good, or if I lose everything and I totally mess up everything, there's a situation where you get hosed as the customer. That's not a good trade, right? Like if I'm paying
yeah.
you for a service, part of that service is if something goes wrong, I should still be okay, right? And so this idea of transforming custody fees into insurance premiums is part of our vision as well. And so I can keep on going about that. And if is there anything else,
Do you
I
know
can
what?
go
I
into the
thought I
tech
thought
too,
I
but
might
jump
just
in
add
there.
add one or two things. So like funnily enough,
Sure.
like to a degree, like I think I mean it's interesting you say that some people think that insurance is fiat because to an extent that is true, like what I've experienced here in Australia, where it's like we wanted to have a jewelry business, we decided to go to a
Hmm.
market and we needed
Hmm.
$10 million worth of public liability insurance for the
Yep.
day. Just to have a stand. And we're like, what on earth are we insuring against here? Like, why are we doing this?
Hmm.
And so there's entire sectors that are propped up through just completely illogical regulation. Same with, everything to do with like, every pool in Australia needs to have a pool fence. Doesn't matter if you're like 75-year-old, Olympic swimmers and there's no children within 100 kilometers. Doesn't matter. You need insurance
Hmm.
for your pool fence and all this kind of thing. So from
Yeah,
from
yeah,
that
yeah.
perspective, I get it. On the other hand, I kind of go, do you know what? It's the ultimate free market in the sense that you want to be able to choose to insure specific things and guard against insured events
Hmm.
that matter to you. So like, you described your pet situation. I've got pets and same stories. Like I've been very grateful to have it. I had a dog on kind of overnight life support a couple years back, ended up having to put him down sadly, but that was 12 grand a day at that time.
Right.
Do you know what I mean? And so like, I mean, that
Yeah.
would have been a terrible decision to have to make on the spot had I
Hmm.
not got insurance.
Hmm.
So yeah, I think there's like philosophically, I don't think that insurance is any way, I guess, contrary to the ethos of Bitcoin. In fact, in many ways, I believe it's just free market,
Right.
operations at work. So I think that makes perfect sense. And
Yeah.
and then
And also
yeah,
remember, yeah, I was just saying insurance predates fiat currency. Lloyd's of London was started in the 1600s before fiat currency was any way that we think about it today in a post 1971 Nixon shock world. So, like, you can't
absolutely.
say it's fiat if it predates modern fiat currency by hundreds of years.
That's a
Like,
great
but
point.
it just very de facto is like a proof that you are wrong in the assessment if that's what you're gonna, if your position is insurance is fiat. Sorry, like it predates fiat currency.
100%. And then, I guess on the custody piece, something a lot of
Yep.
Bitcoiners, I think, do struggle with is that idea of a percentage-based fee, whether you've got 100,000 or $100 million, the amount of
Mhm.
work required is pretty much the same. And so if that does not,
Right.
if that's not accompanied by some sort of insurance or assurance
Bingo.
that if you screw things up, um, that I'm going to get my at least the
Bingo.
fiat equivalent back. That's where things I think Bitcoiners start struggling. So I would say even the most anarcho-capitalist Bitcoiner who is anti all forms of collaborative custody where there is that percentage-based fee would have to at the very least
Well,
concede the value of having a collaborative custody model, at least with insurance.
bingo. Right. And this is a really important point, is that the variable rate fee based on how much you store. I did a really good talk about this at Madeira, uh, a year ago, a little over a year ago. Basically saying that you have ultimately, like, if it were data, it's not data storage in the traditional sense, right? You're storing a key, which is really important. It's a very small, small, small bit of data. All of the cost is keeping that key safe, right? It's not like, oh, I'm storing petabytes of data on the internet for you, like an AWS service. Like it is, I have a 256 bit number, which is your private key, and that's the thing I need to keep safe. Now, the marginal cost for keeping that key safe, for that same key can hold $10 or $10 billion. That's how Bitcoin works, right? Like a single key can hold, like, the amount of data you have to store is not commensurate with the amount of value. Insurance makes sense to have a variable rate fee because you're paying the kind of payout you're getting to what premium you're paying in, right? The premium for a um my like a $20,000 car versus a Ferrari is different, because not only because the risk profile maybe of driving a Ferrari is higher, but in the event there's a loss, there's a bigger payout, right? So like there's actually like a market alignment of the more you pay in premiums is because there's a higher potential payout in the event there is a loss, right? So these are all, I think that's why it's been a beautiful thing for the early movers in the industry to run a SaaS business as an AUM. It's really nice. Insurance is the missing piece to that, though,
Mm,
because insurance is asset under custody, kind of like asset under management business. And the fact that what's happened in the market dynamic is, I think there's just been a lack of sophistication in the development of it. All of the early movers that are on the SaaS side love being able just to charge the SaaS fee. Because if I'm just charging you a custody fee, that's all my margin, right? That just goes right to my bottom line.
yeah.
Whereas if it's insurance, you have to pay out majorities of those revenues to the insurance carriers, because that's the whole trade. Okay, I'm going to pay you $1 million if something goes wrong, but I'm going to take most of this insurance premium that comes in the door to be able to hold aside in the event there's loss across my many, many, many customers. So that's like a definitely like a that's why I think it's just a better market alignment if you're paying, especially if you're paying asset under management fees, like asset custody fees. Um, you pay if you're an average size holder, you're paying somewhere between 15 and 25 basis points for a single custodian somewhere. Our starting price is 40 basis points for insurance. And so instantly, yes, it is more expensive. But you're getting what you're paying for in a way more meaningful way. And if you're a fiduciary, if you're many, different stakeholders, paying a bit more to actually have it insured as opposed to uninsured or heavily underinsured. Coinbase has somewhere around $400 billion of assets under their management.
Yeah.
They have a $300 million policy.
Wow.
So if you had if you had $1,000 on the platform, you get a penny back, I think is the math. Like it's one of those things that risk markets are a much better alignment for understanding what you're paying for.
Yes, 100%. So I think the case for that should be pretty clear. And perhaps what you could argue is that because so many of these institutional products, even if some retail adopt them, are very early, there's that asymmetry of information. And they can, I don't want to say exploit that, but it's natural in all markets. Whenever there's a new market that emerges, people are going to try and make as
Hmm.
much money as they can in the beginning. But I
Totally.
think over time, all these models that don't have any insurance built in, it's kind of a race to the bottom. And I think what they want to try and do as quickly as they can is get as many assets under management as they can to be
Hmm.
able to sell to, I guess, some of the bigger institutions. And I'm thinking things like banks,
Yep.
because over 10 years, I can't see how their model stacks up because I think then
Right.
the asymmetry of information is gone. And people go like, hold on, I can actually, if I really, what are you actually doing over there? Okay, you're not doing anything. I might just rather learn to how to self custody and then pay, whether it's
Mm.
Unchained or Nunchuck or whoever, $250, $300 a year. And I feel like, okay, I'm pretty confident. That's great. I'm not paying
Yeah.
the 1%, the half a percent, because that all compounds. And unless there's some sort of additional benefit, which you clearly are addressing. So I think that makes perfect sense. Now, just from like an institutional adoption perspective, did you feel at the time of establishing the business that it might hamper adoption if there wasn't some sort of institutional insurance product built into it?
Yeah,
Yeah.
absolutely. Yeah, that was one of the big compelling points is that there are many people I've talked to who are investors, like large, like asset managers, and one of their reservations was they couldn't get insurance for the Bitcoin itself. Right. Because if you think about it this way, like if you want to buy Bitcoin, you accept the price volatility that comes with it. Like you're right, I understand this is volatile. I'm willing to get into that trade. What I don't have to deal with is an FTX or a Celsius
Yeah.
or a Fortress Trust, where you don't want to deal with these institutions that just go up, belly up. Right. And so I think insurance, especially for like at scale for like wealthy people, is a really big part of how they preserve their wealth. In that um, if you have a $10 million home and you're worth $30 million, you insure that $10 million home because like in the event that goes up in fire, that's a third of your entire worth, right? Like you're much more willing to pay the extra costs to avoid what's called a risk of ruin, where you never want to have a circumstance happen where a risk event happens and it permanently impairs your financial status. And insurance is how you do that. You take small bits of your existing wealth to maintain and protect the risk that sits around your estate.
Yes, absolutely. And I think you could almost lump other things like, disability insurance or things like that into
Hmm.
that category to the extent that you wouldn't
Sure.
be able to work. And in Australia,
Hmm.
they incorporate that with many of the pension funds as sort of a
Hmm.
given. And it's one of the reasons why people might want to keep some money in a traditional pension fund because at least you get
Yep.
that cover. I
Yep.
suppose, I guess. So you're saying now on the pension, sorry, on the insurance side of things, okay, I think I've got the raison d'etre, as it were. I understand the need for it, I understand the benefit of it. I think then the question then becomes, okay, how does this actually work in practice? Because a lot of Bitcoiners obviously have that don't trust, verify mentality, and perhaps rightly so. We've seen so many collapses over the years, and so somebody's going to be handing over their Bitcoin to a third party. Let's just talk through the actual model itself. You've described also I've seen Miniscript, how that operates. What
Hmm.
is the kind of key setup, how the keys distributed, etc.
So let's take a couple steps back, right,
Yeah.
on what Miniscript is. So Bitcoin is programmable money, right? And many people are probably familiar with a multi-signature. It's a smart contract. I have three keys. If two of the three keys sign, I can move the money. Um, Bitcoin can do much more than that, though. What Miniscript is, it's a project that came out of Blockstream research from Sipa, Andrew Polstra, and Sanket Kandahar back in 2018. And the whole premise was how can we design Bitcoin scripting tooling in such a way where you can use more advanced functionality that exists in Bitcoin without blowing up your foot. I could create a Bitcoin address right now with a smart contract by hand and deposit money into it. And maybe I encoded it incorrectly, so it's impossible to spend. Maybe I encoded it in such a way where someone can steal the money, right? I insecurely, so the moment I broadcast, someone can go in there and do it, right? What Miniscript does is I call it like bowling with bumpers, where you
Mm,
can't throw a gutter ball. Like there is a guaranteed way you can satisfy and run the script, assuming that you have the requisite key material. And what this really unlocks is a couple really powerful concepts. One, it allows you to leverage time locks in a safe, sane way. Now, Bitcoin added time locks back in 2015 and 2016. They were the last upgrades before SegWit. And what time locks allow you to do is there's a couple different metrics on this. You can do what's called an absolute time lock, which is based on an absolute block height or an absolute moment in time, like a calendar date.
mm,
Something can happen. Or a relative time lock. Relative time locks are once the Bitcoin is confirmed on chain, it starts a timer. So you can say, hey, if I haven't moved my funds in 6 months, let something else happen. Right. You can start adding these like kind of contingencies. And then you can actually add this with like and or logic to start doing a bunch of things where I could say, okay, I want it to be my two of three and this time lock, or I want to be this two of three and another two of three to be able to move the funds, right? Not a four of six, but this two of three and this two of three must entirely sign, right? And that's a really interesting security premise to start thinking about how you can start designing other kinds of financial contracts. So what we've done at AnchorWatch is we realized one of the key parts of being able to, on the risk side, is risk distribution, not having all of it sitting at one spot.
Hmm.
And we are able to achieve that through each customer holds keys in an AnchorWatch vault. So if you were a customer, and let's say American Huddle was a customer, and you had an incident over there, that risk is not correlated directly to the other like customers, right? The problem with like larger custodians that all the keys that sit in one spot, or even with like a multi-institutional custody, if the same two companies hold it, you eventually will hit thresholds of risk where they can't insure anymore, right? And so this technology enabling risk distribution is just a really big 0 to 1 around the risk financing market and being able to actually set up Bitcoin in such a way that it could actually be secured and insured. Additionally, we leverage time locks. So I mentioned the kinds of time locks. There's two different clocks in Bitcoin.
Hmm.
You have the block height, you know the block height. You also have calendar time. So every single Bitcoin block, miners put a timestamp of when they found that block in the header of the block. This is how the difficulty adjustment works. Every 2016 blocks is 2 weeks. It says, okay, how much time has passed between this time? This is how the Bitcoin network actually understands how much time has passed to do the difficulty adjustment. So if it found 2016 blocks and only a week went by, it's like we need to up the difficulty. We're finding blocks way too quickly. On the flip side, if it took a month to find 2 weeks worth of blocks, we say we need to decrease the difficulty. Right. So you're actually able to anchor that in your time locks and use that to actually enforce times on chain. So for us, when your insurance policy expires, you're no longer a customer with us. It doesn't even matter. You are able to by yourself take the funds out as your own two of three, which is a different custodial relationship than you'd have with anyone else. Where like if you held your funds at any custodian, at some point you're like, "Hello, Mr. Custodian, I'd like my funds back, please." You have to hope that they have the withdrawal for you. Whereas for us, embedded naturally is your ability to self custody withdraw when the insurance contract expires, all on your own without talking to us. Um, and there's a lot more pieces and nuance within there I'm happy to get into, but this was kind of like the really big unlock on the technology side, plus all the insurance side to kind of build AnchorWatch.
Okay, awesome. That makes sense. And perhaps this should have been asked from the outset on my part, but what are the typical insured events that we are guarding against? I mean, range attacks is one of the obvious ones, but
Yep.
what about just blatant negligence on my part and other things like that? Like, what are the things that are covered,
Mhm.
and what are the things that you would look at as a business and go, like, those are just not, we can't insure those events?
Yeah. So a couple of things that we can cover right off the top, like permanent destruction of the key material, so it's permanently lost,
Hmm.
right? Next one, on the negligence side, in the event you lose all of your keys, we are still able to recover the funds for you. Because what we do is at month 11 of the policy, there's a 30-day window where ourselves at AnchorWatch plus Coin Corner out of the Isle of Man can come together and reconstitute the funds, give them back to you. The word negligence in a legal contract is really specific, though. And I say that like we require you to not keep your keys at the same address. You can't keep all of your keys at the same location. So if you're like, I was negligent, I kept all my keys in the same spot, that's not insurable no matter what, because that's not part of the agreement that as your insured responsibilities you've done. Kidnap and ransom, like events, like is the bucket of what you'd call like a wrench attack. We cover in the event that you and your immediate family are physically coerced into moving the funds. Yes, that is covered under the policy. Um, it's not officially kidnap and ransom in the same way because we don't pay the ransom payment, if that makes sense. Like
Yeah.
kidnap and ransom is its own kind of like boutique corner of insurance land where you're actually, if someone kidnaps you and they demand $1 million ransom, like you get negotiators and insurance paid out that claim. That's not what we do, just
Yeah.
to be clear, right? Um, but those are kind of like the high level things. Basically, the technology mitigates many ways that there could be a permanent loss, and the insurance is in there to kind of step in and cover the gaps of what the technology literally cannot do. Things we cannot cover, quantum computing,
Hmm.
just because like that is a mass catastrophic loss of all Bitcoin on the network, right? Um, so if like SHA-256 breaks and like everything just kind of like starts falling apart. Like there are just like systemic things that aren't specific to you, but are like our Bitcoin in general. We're not price insurance, right? So if you Bitcoin's at 95,000 US right now, if all of a sudden Bitcoin's at 20,000, you're like, hello, I'd like to file a claim because the Bitcoin price is down. We're not an options contract, right? So um, all of the comprehensive ways the way the policy language like is written is like your permanent inability to spend your funds, which is important because if you are delayed, let's say you lost all, like let's say you set up your vault and you went to your kitchen, you threw everything in the microwave and you just destroyed all your hardware. That's not a permanent loss. There's a time lock. We'll be able to recover the funds for you eventually. Don't worry about it. But like that permanent loss is kind of the main piece that we're insuring against in the vault.
Yes, okay. And also death, I would imagine there, Rob, hey, when it comes to like,
Yeah.
yeah, I die and my wife's like, okay, what do I do now? Well, I'm assuming then in that instance, if she can't
This
like
is
actually get hold of the keys, she can contact
mhm.
you guys, and your time locks are what, like 12 months or just under 12 months, something like
Yeah,
that.
it's a 1 year policy, and the time locks go all the way out. That sovereign layer where you can spend by yourself is at day 380, which is a year plus 2 weeks. We have a 2 week window at the end of the policy to like speak now, forever hold your peace. Do you need anything before the policy expires? It's really amazing because we inadvertently, in the sense of it wasn't like the explicit stated goal of designing the vault, it's a really compelling inheritance protocol.
Yeah.
And what I mean by that is if you're a customer, you have beneficiaries, we're able to step in and in the event of your death and verifying your death, everything like going through all the paperwork and verifying that, we can use that recovery layer where if you lost all of your keys and we can actually use that to reconstitute the assets and give them back to you.
Yes.
Right. We like so if you had died, we can like your wife can reach out to us. She's listed as the primary beneficiary. We can set that all up and return the funds back. Right. So it also doubles in that sense of like an inheritance thing. And it's not an insurance claim, right? The Bitcoin's not lost, right? So it's something that's actually even more beneficial to you, where you just get the Bitcoin back.
That's
Yeah.
great. And something I was just thinking about earlier was because it's underwritten, if that's the correct terminology, by Lloyd's of London, like a 300-year-old institution, I'm assuming here that a claim is not dependent on your liquidity in any sense. Like it's not like we
No,
have to worry about AnchorWatch's financial management. It really comes down
no.
to the insurer.
It's actually, yes. The answer is yes. You do not have to worry about our liquidity, which was kind of the whole bootstrapping problem of you really can't start an insurance program out of your basement as like a tech startup in the same way. No, you want to do insurance. Cool. Who's insuring you? Because they're the balance sheet that's actually backing it. So structurally, it's actually called a syndicate. It's actually a pool of multiple insurance carriers that are backing this Anchor Watch policy.
Okay.
So
Yeah.
there's many A-rated, pristine insurance carriers that are the ones actually holding the risk, which operationally separates the financial risk of AnchorWatch as an ongoing concern in a business and the actual reserve pool that would be paying out claims in the event there is a loss.
Australian friends, last year I set up a self managed super fund because I was fed up of mediocre performance and my fund clipping the ticker 1% whether it went up, down, or sideways. When I asked them, what are you actually invested in? They said it was confidential. Oh, I see. You take risks with my money, get paid no matter what, and then refuse to tell me what you're invested in. So, rather politely, I told them to GFY and I set up my own super. And that's proven to be the best financial decision I've made since buying Bitcoin. And of course, you can buy Bitcoin within your own self managed super. It's not difficult to get started. And if you're keen to learn more, email me at dale@bitcoinmentor.io or set up a discovery session. The link is in the show notes. Now, back to the show. Okay, interesting. So, I guess now on the basis of those companies being able to offer Bitcoin insurance, which in itself is indicative of kind of where we are from a market maturation perspective, they would naturally have some sort of requirements in terms of how the Bitcoin is actually custodied. And they've
Yes.
obviously done a bit of a dig into your operations and said, okay, we like
Yes.
your tried and product. And so
Yes.
perhaps, I think a lot of listeners might be quite familiar with the different two of three multi-sigs where you can you
Hmm.
keep one of them, and then there might be a platform key, whether it's Unchained, Nunchuck, whatever, Casa,
Sure.
whoever. Um,
Yeah,
Talk to us a little bit about that difference between yours and those types of products, and then I guess
sure.
weave in the mini script piece that you've described.
Yeah. So at its core, there's two primary key sets. You, as the customer, have three keys, three hardware wallets. We at AnchorWatch have three keys. To move the funds at the day the policy starts, it requires a two of three from you as the customer and a two of three from AnchorWatch. Then 6 months in, we actually use a time lock and say, you know what, at 6 months in, it should be one of three from the customer and two of three from AnchorWatch. And then at month 11, it's in the event you lost all of your keys, it's a two of three from AnchorWatch plus a key that we have with Coin Corner, right? And then finally, that sovereign recovery path a year and 2 weeks in, where you by yourself can just use your own two of three. Now, you can notice through these different steps of the process, AnchorWatch never has unilateral control of the funds. Even if I wanted to go evil and malicious tomorrow, let's say you sign up for a policy today, I'm like, oh, I'm going to try and steal the money. You have to co-sign the transaction, right? And this is where a very big paradigm shift that Miniscript enables is this concept of co-signing. You can have an entity hold a key or multiple keys, and they could never be able to move the funds on their own, in theory, right? You could design your all of this stuff out this way, which is interesting because we get to actually start enforcing behaviors on the user because of this. A
Mm,
perfect example, whitelisted addresses. So with any general provider out there, you could just, load your own software and deposit to any address you want whenever. For us, we will not co-sign unless that's on your whitelisted addresses. Additionally, if you want to add a new whitelisted address, we'll make you wait a week or 3 days, right? And actually, this impacts your insurance premium, right? Additionally, we have velocity controls, meaning if you're a customer, just to make the math easy, let's say you have 10 Bitcoin, you're insured for, let's say, $1 million, 10 Bitcoin, just say it's $100,000. And you sign up and say, you know what, for the length of this policy, I don't want to spend any Bitcoin whatsoever. We call that the HODL discount.
mm,
We will set up the vault, we'll do a test transaction, make sure you're good and comfortable. And then we don't do any signing for the rest of the year. And this is a really powerful concept because even if you're like, oh, someone broke into my house and they're making me spend my money, they got me to sign my keys, and all of a sudden we're like, well, you signed up for the HODL discount. You said explicitly during the course of this entire thing, you do not want anything at all to be signed. Right. So it's a way to protect you by making things slower. Or you could say, hey, you know what? Using that 10 Bitcoin example, I want to spend 10% of my vault a month. Maybe I want to have a couple $1,000s here and there for life and expenses or whatever, but I don't want to be able to withdraw everything.
mm.
We just enforce that on our side as a cosigner. And this enables something we like to call it AnchorWatch negative control. For the entire duration of the insurance policy, AnchorWatch is unable to unilaterally move funds. Well, AnchorWatch is never, even across time, ever to move funds anywhere. During the insurance policy, funds cannot move unless AnchorWatch agrees with it, but AnchorWatch is not sufficient to move the funds on our own.
Okay.
So it starts changing security models and features that you can enable for Bitcoin custody when you have an entity that cannot move the funds on their own, but they can help affirm certain spending behaviors you agree upon at the time of setting things up, right? And that's just a really powerful concept of thinking about with whitelisted addresses, velocity limits. It allows you to have a stronger vault-like architecture with delays, right? Like, oh, like I want to send to a new address. Well, I can't send to it now. I have to wait a week.
Yeah.
Exchanges will do this. Exchanges, like if you set up with an exchange, like here's my whitelisted address. And if you want to add a new address, maybe you have to wait a week before you can do it. We're able to do that for your own funds, though, and actually be able to enforce that. So it's a really just in that sense, it's fundamentally different. The trade-offs of that, to be very blunt, is that unlike you mentioned Unchained, you mentioned Casa, you mentioned Nunchuck, like all great companies, I love what they're working on. Our design is different. It's explicitly made different, and that at any point you can unilaterally send all of your Bitcoin to anywhere you want at any time using any of those services. There's nothing wrong with that, to be clear. For us on the insurance side, we set up these extra controls and gates to make it insurable. And because of that, it is more insurable. And two, we had to build out our own custody stack, leveraging the Miniscript stuff to really get the most of that. Mind you, Miniscript is near infinitely customizable. So there's no reason why people couldn't run their own versions of this, which aren't the insured one, where maybe they want to say, you know what, AnchorWatch, I love what you're doing. I don't like that window at the end where AnchorWatch and Coin Corner can move the funds. I just don't like it. Okay, we could just remove that and be like, okay, customer, you have to hold on to one of your three keys then. And we can set up the whole thing and have it work. And so AnchorWatch never, ever can ever move the funds without the customer's explicit consent. You could set it up that way. A really good project I like always giving a shout out to is the Liana Wallet guys
Yes.
from Wizard Sardine. Yeah. So they have a fully open source, like desktop client, lets you kind of leverage this stuff. It's funny because what they do is they do relative time locks based on block height, and we do absolute time locks based on clock time. So
Oh.
they like there's four ways you can do time. So we're like total opposites in the technical sense of how the time locks work, but it's in the same spirit, right? They also, to my knowledge, don't do multi-sigs and multi-sigs. They do like a two of three that becomes a one of three, or a two of three that becomes a two of four, right? Which is really handy for inheritance and for like mitigating disasters too in its own right. Like it's great tech. Um, so like that's like for people that want to like go run and play around and touch this kind of stuff, like Liana Walt's a really great place to start too.
Rob, whereabouts, like, if would someone like myself be able to verify this information? Because I think that's one of the things, like,
Hmm.
if you're not technical, like, I love everything that you're saying sounds great. I mean, it sounds like there is
Hmm.
though a degree of trust, and like if there's vault products that are being built out, for example, here in Australia with some of the exchanges, at least in the world of
Sure.
Bitcoin, and what they're doing is they're obviously just publishing the address and saying, okay, you can see it over there, and
Hmm.
they're doing things in a way that is as transparent as humanly possible. I obviously recognize the need for you guys to have built it in such a way that it is insurable, to get the backing of a crowd like Lloyd's. But, what could someone like me, a lowly pleb with no technical knowledge, do to get a little bit more assurance, that there
Yep.
isn't something that you can do on the back end to just make off
Sure.
your funds? As much as I trust you.
I love this question. No, I love this question because I have an answer for it. It's also just as an entrepreneur, you're always waiting for that question to stump you. I'm always waiting for the wind up, and I haven't found it yet. So like I'm still waiting and listening. Um, anyway, so to that point, when you set up your vault, before you deposit, what we'll do is if you're a customer, you sign up, we'll deposit $10 in there, let you do a test transaction, check it out. And what we'll do is we give you a recovery kit. It's a full PDF with a bunch of instructions and all of the output descriptor, like the vault information.
Yep.
You can do two things. One, you can give it to someone you do trust that's technical to review it. And two, you can load it into Bitcoin Core yourself. You can load it into Bitcoin Core and see, oh, look, there's that test deposit I did. Oh, look at that deposit address. It's the same deposit address that's on the website, right? You can take on your own code and your own stack and validate the entire thing, or take that printout and be like, hello, Bitcoin expert, can you please review this for me? In an effort to kind of help this, I posted, there is a repo that Blockstream has called Miniscript templates.
Hmm.
I'm the only one there at the moment who's posted one, but you can look at the Miniscript template that clearly documents how the vault should operate and work and how it should like how it should look. You could compare it against that, right? It's a really just powerful like concept of like, I understand not everyone is going to get into the technical minutia um, at a reasonable level to like feel fully confident.
Yeah.
And that's why we try to provide these trade-offs of, okay, run it on your own software. Okay, here's the printout, take it to someone else. And that thing that's on your printout is also on your insurance policy. So you can directly like matchy, be like, no, this is what my insurance policy says is covered, right?
Okay.
I put a lot of thought into trying to bridge the gap in understanding to make people feel more comfortable about it.
Yeah. Okay, cool. I mean, I certainly would take the latter course where it's just like, okay, I'm going to print this out, take it to a mate, say, listen, okay, you help me out. But that makes absolute
Totally.
sense. And
Yeah.
then I suppose just on like a practical level, right? So let's imagine I got $3 million worth of Bitcoin. What I'm going to do is actually, I don't want to put my whole stack with you. It's always good to kind of just
Sure.
manage a bit of risk. So let's
Of
I want to
course.
insure it for $1 million. But during
Yep.
that, we have a 2022 like episode,
Yep.
Bitcoin absolutely
Hmm.
collapses down
Yep.
70%. My initial
Yep.
insurance premiums were based on 100K
Yep.
Bitcoin. I'm now sitting
Yep.
at like a 30K Bitcoin. Um,
Sure.
I'm sitting there going, I'm insuring for $1 million, but my Bitcoin I don't think is going to get there, and we're in for maybe like I perceive to be like a long winter.
Sure.
How does how do you, I mean, obviously you're not an options contract, you're not trying to hedge against that sort of thing, but how does it work with regards to the premiums? Are the premiums set in stone for the 12 months? Like just talk to us about that sort of volatility
Yeah,
piece and that customer experience of like, oh shit, it's down 70%. Now what?
sure. Very unfortunate when we founded AnchorWatch. Well, since we've launched, the price has only gone up. I'm sorry, maybe that's one of the bullshit indicators, but like, to directly answer your question, if all of a sudden you're like the price, you pay your premium upfront for the annual premium. Now, in the event the price crashes and you want to change your coverage for let's say you're 6 months in, send us an email with your like the new amount. We re-update it, we reimburse the difference, and you're done. Super simple. Just change your coverage. So if you have $1 million, but now your Bitcoin's only worth $500,000, to be like, hey, prices dipped down a lot. I'm overpaying for my insurance. I'd like to change my coverage, my limit, and we'd be able to do that. Same thing on the upside. If the price goes from 1 million to 10 million, because we have a hyperbold 10x, you're only insured for $1 million. So if you want to up your coverage, same thing. Send out
Okay.
note, email, update your stuff. Yeah. It's also really, it's not even just like a personal, like my own sense of duty of feeling like treating customers fairly. It's a pretty rigorous compliance standard to be a Lloyd's of London cover holder too.
I can
So
imagine.
like as much as I earnestly want to be honorable in how I conduct business, if there was just if my answer was sucks to be you, like we wouldn't be in the position that we're in. You know what I mean, right? Like, so it's independent of my own personal like level bar of execution. It's also just part of the standard for just going through our ability to sell to individual retail customers. We have to make sure we're treating customers fairly,
No
and that's part of
doubt.
treating customers fairly.
Yeah.
Yeah,
And I mean, just to kind of touch on the insurance product just for the last time, and then I want to jump into something a little bit related, perhaps. But
okay.
I think when I'm thinking about who the potential clients here, obviously there's high net worth individuals, people got a lot of
Sure.
Bitcoin,
Hmm.
family offices, that sort of thing. What
Yeah.
about like from an institutional perspective? Who are the clients? I mean, are ETF providers? Like we've got one over here that's got like 100 Bitcoin under management. Like, are these the kind of
Yep.
folks who you could partner up with, and then when they go to market, they kind of go, "Hey, your Bitcoin's safe. Leave it with us."
Yep. It's the whole gambit that everyone talked about. Private, multifamily offices, family offices, private like wealth managers, any sort of fiduciary, publicly traded companies. These are all people that are customers we've had conversations with at different scales of progress, right?
Yeah.
Um, so the answer is anyone who's holding Bitcoin, especially if you're holding it on behalf of someone else, like an ETF or like a publicly traded company, it's the company's treasury. These are all kind of important pieces to be considering.
Absolutely, because I'm just imagining like a hypothetical 75-year-old guy is finally grokked Bitcoin because his son has been chewing in his ear for like a decade, and then eventually he's
Yeah,
like, okay, fine, I'll get some skin in the game. He's got a brokerage account, so he's just like, go and buy some. But then you're like, Dad, listen, you got no, don't trust verify, you got a self custody, and he's like, listen, relax. The provider's actually got insurance, so we're covered, all right?
right.
So I think that could be quite powerful, and I'm sure that's going to sort of build out in the future. Just to sort of shift gears a little bit now, I mean, literally in the last few days, we see that the Bitcoin spam debate is back. And
Yeah.
I'm just wondering, kind of, just on a principled level, what do you think about all this stuff? I mean, now it's like the op return and the inscriptions, and if I don't know much about things like Bitcoin knots, and I don't tend to dive too much into the technicals.
Mhm.
But what is your philosophical view, and then how does that actually impact what you guys are doing on the financial side? Like, does it actually impact your ability to offer your service when people are putting monkey pics on the blockchain?
That direct thing, no, it doesn't impact us. It it just doesn't. I like Stanley Drunken Miller didn't sell his Bitcoin because people put monkey pictures on Bitcoin. Like Michael Saylor didn't sell all of his Bitcoin because the op return limit may increase. Right? It's an entirely different like cohorts. And to Steelman, I would say that people who are concerned about that stuff would say that's exactly the problem, is that they're permissive and they don't care about this stuff as long as the price goes up. Right? My personal belief is that mempool. Let's take a step back for your audience because I don't want to get too deep right into the swing of it all. In Bitcoin, there are certain rule sets we call consensus. Consensus are things like 21 million Bitcoin, the block size, blocks on every 10 minutes on average, like like all of those things that you would think about are the general rules of how Bitcoin works. Things like time locks, multi-sig, these are all consensus things. Um, there are things, though, that are also called policy. And what policy is, it is a subset of consensus. And those are certain things like a valid Bitcoin transaction is I pay 0 Bitcoin from one of my addresses to 0 Bitcoin of one of your addresses. No sats move. It's technically a valid transaction. Now, it's just not part of policy. Um, Another example, taken directly to this, is that in the way, and this is done in how nodes communicate with each other. Um, Today, the policy limit is 80 bytes per op return. The consensus limit for an op return is 1 MB. An op return, if your audience isn't familiar, it is a way that you can say that this is a provably unspendable output. And because it's provably unspendable, you don't have to hold on to it forever. Whereas if you send Bitcoin to an address, you have to hold on to that forever because if someone ever goes to like spend from that address, you need to be able to look up on your node and say, ah, yes, here's my accounting entry for this UTXO, is what it's
Mhm.
called, right? My personal belief is that the mempool policy in general should be as close to consensus as possible for several factors. One, for a healthy operating layer two network like Lightning, the reason why Lightning works as a trustless protocol is that you always can go back to layer one Bitcoin at any time. I have a payment channel with you, and at some point I go back to layer one. Now, when you think about it that way, you need to have an understanding of what the current fee rate is at layer one. If you don't have a good idea of what the fee rate is at layer one, you may be found offsides and not able to close your channel. We actually saw this when the fee rates rapidly spiked really quickly. A lot of Lightning channels started closing because they're like, oh shit, I need to close because I don't have enough money on this channel to trustlessly exit to layer one,
Mm.
right? So you need to have this like feedback loop and understanding of how the fee rates are negotiated for to be able to trustlessly settle. Additionally, from a place of miner centralization, you need to make sure that some mining pools, the whole premise of mining is that everyone should be able to plug their box into a wall wherever it is in the world, and the software is able to give them, within a very, very small variation, the most profitable block possible. The reason being is you don't want to have what's called a dark mempool or private mempools, where me as a person are able to have a special relationship with someone making Bitcoin transactions and they only send them to me as a miner. And because they only send them to me, I'm not going to share them with anyone else. And all of a sudden, maybe I can make way more. Like a perfect example of this is Marathon Slipstream. They are able to let you put a bunch of arbitrary, whatever you want in there that's consensus valid. You just have to pay 5x the current market rate of Bitcoin
Wow.
transaction fees. And so they've made millions of dollars as a publicly traded company by offering this service. That is a form of miner extracted value. They are able to, in the sense of, as a miner, because of their relationships, are able to make more profitable locks than the rest of the network. It's not MEV in the sense of like ordering transactions, but that's just kind of a bucket. So, but those two things, I very on a very strong basis of how Bitcoin works as software needs to operate that way. Um, the counterpoint to Steelman, those is that there is a moral, cultural question around allowing things like op returns to have an expanded limit. And the whole controversy was we want to move from 80 bytes to a whole megabyte, remove that policy limit. And this is because there are multiple companies that are doing this. One of them that's launching soon. Basically, what they were going to do is they were going to start putting data in random public keys that are provably unspendable to spark data. It is just better if they put in an op return because then it's not a permanent like dust transaction that sits there for eternity. If it's an op return, your node can just throw it out and not care. Um, it's funny because I'm a fan of Ocean. I'm wearing Ocean swag today,
Yeah.
right? I think it's funny because in the world where Ocean is bullish on their mission of decentralizing mining and succeeds in it, it does not matter what your personal opinion is. It should not matter or care, right? And I think to me, the ultimate mission of Ocean of decentralizing mining is that everyone's free to do whatever the hell they want with their mining and block construction and templates. And so the controversy now is about removing this limit. It's not a consensus change. Um, And it's one of those things that uh, I feel pretty strongly about on the foundations of how Bitcoin works as a peer-to-peer network, the mining incentives and centralization. Those are all things that should be um, put first before orthodoxy and ideology and cultural kind of cachet on stuff.
Yeah. Okay, that's an interesting take, and like I really do appreciate hearing about that because to be honest with you, when it comes to some of the technical stuff, I do find it tends
Mhm.
to go over my head. But I have listened to a fair bit of Bob Burnett of late, and
Yeah, I like Bob. Yeah, yeah,
he does make some compelling arguments.
yeah.
Rob, you've been very generous with your time, and excuse me, I
Sure.
wanted to just leave us with one more sort of question about kind of where AnchorWatch is going. So.
Mhm.
A lot of my audience are actually here in Australia, and I see also now that you got a $3 million funding round, and you've got a partnership with a company called Inslee. I wonder if you can just talk to us a little bit about that partnership, and
Sure.
perhaps talk to us a little bit about kind of what your plans are, just in terms of global expansion and that sort of thing. Because I think there's certainly a demand and an appetite. Just
Yeah,
I guess from a regulatory perspective, it's just another kettle of fish, isn't it?
totally. Yeah, I mean, so that fundraising round was in 2023, fall of 23. So, just to contextualize the timing of when that raise happened, what we've been doing since then is building out the relationships with Lloyd's of London and finishing the tech, and now we're live, right? So a very massive milestone. At the time we got that fundraising, it was like, can you get the tech working and can you get the reinsurance? And we spoke to a lot of people and they were like, this sounds really interesting. Come back to me when you've written your first policy. Basically saying, I don't think you're going to do it. We now have dozens of customers. Like we're live, like it's a real thing. Um, Very bullish and exciting. For where I see ourselves coming from in here is expanding our offerings and being able to insure and protect Bitcoin wherever it sits. As a tech native company, we are able to directly integrate with large custody providers and infrastructure players and basically like almost like a menu being like, oh, what do you want? Like we can spin that up for you, right? And that's something that comes from we haven't white labeled someone else's tech stack. It's our tech stack. And it's highly modular to be able to customize and meet anyone's needs. Hot wallet insurance, multi-institutional custody, being able to do basically any construction and arrangement of how Bitcoin works today. A lot of people ask about like, can I just get a wallet that has you guys be a co-signer and then you disappear, right? Maybe that's something we do. Maybe it's not insured, right? Like these are all different angles and pieces and things. And I think over time, helping secure the Bitcoin wherever it sits. It's like the grand arching vision.
Mm.
Um, Inslee's great. They're one of our policy management partner for how we basically um, all of the insurance back office stuff, right? A quote comes in. Okay, you want to price the quote and tie it into like your ability to price the risk and give it a premium. And then you want to generate policy documents, like the actual insurance documents, right? You want to do reporting and accounting for insurance providers. You want to be able to set up all of your tax accounting, right? Like really great partnership. Risto, the CEO, there's also a huge Bitcoiner too, which is
Right.
fun. Right.
Cool.
It was very cool. Like hopping on the calls, they were like, "Oh, usually our CEO doesn't join us because he's a big Bitcoin bull and he heard about a Bitcoin insurance company. He wanted to learn more about it." Right. So like, it's fun stuff like that. They're a great team.
Brilliant. Yeah, I think, I mean, that is the grand vision. Ultimately, yeah, we would love to see something like this come through to Australia. And apologies if you hear any construction noise in the background. They get going early here in
No
Australia,
worries.
7 a.m. But yeah, certainly something that someone like myself would be particularly interested in. And when I think about like just the amount of people out there that have to be at least interested in exploring this as an avenue to ensure a portion of their stack. I mean, I'm thinking also there might come a time, even here in Australia, where um, the regulations might be such that you need to acquire insurance because we have I don't want to call it, it's a bit of a hack, quite frankly, but we can set up our own self-managed pension funds. And a lot of Bitcoiners have done that. And would you be
Yeah.
surprised if
So
they've got would you be surprised to learn they got 100% Bitcoin allocation? So, something that's going to sit there and, for 20, 30 years, you can't touch. I mean, this is the perfect kind of product for them. So,
absolutely.
yeah, we'll certainly be watching here. And yeah, if there's anything we can do to get in the ears of the right people, please do shout because we've got an industry body. in Australia, a Bitcoin industry body that is trying to champion the industry, trying to make the regulators see the difference between Bitcoin and crypto. We're trying to do all sorts of things. We'd love it for to be commodity money, no capital gains tax. That's great, but yeah, anything we can do to help, yeah, always feel free to reach out.
Absolutely.
Yeah.
No, I love the Australia Bitcoin crew. I was down there for Cheat Code Australia last fall in Sydney. That was an amazing time. You have a great crew of Bitcoiners out there. I want to make it out to a Bush Bash at one point. That's one of
Oh,
my goals. I want to find an excuse to make it out to a Bush Bash. But you have Michael and Peter Dunsworth. You got Catan. You got Danny Knowles. Like you guys punch above your weight. I love it. I love the people. I love the weather. Love spending time down there. Hope to be down again there soon. I will. Like I said, I want to make it to a Bush Bash for
oh,
sure. So I'll
brilliant.
let you
I'm
know.
so pleased to hear
Yeah.
that. The funny thing is, I had never met a Bitcoin in real life till I went to a Bush Bash. And then, do you know what? At one of the Bush Bashes, I came up with this genius idea, I thought, of creating a Bush Bash. Because I was like, I expected a Bush Bash to be in the bush. And it's not a bush, it's a small town. So we went and created this camping experience. Well, I
Nice.
was a terrible organizer. I arrived a day late, but in true Bitcoiner fashion, it just sort of took a life of its own,
Of course.
and now subsequently they had one, over Easter. I haven't been to one since. So, I've got a 9 month old, so things are a bit difficult
Oh
with me.
yeah,
But yeah,
of
it's amazing.
course.
These things just take a life of
Yeah,
their own, and I love it. I mean, there was one in New
absolutely.
Zealand this past weekend, so I just love that about Bitcoin. How little idea spawns and then it just runs, and it's permissionless. No one's going, "Hey, bro, you taking my idea."
Absolutely.
Awesome. Well,
Absolutely. No, that's so good.
we'd love to welcome you to a Bush Bash or a Bush Bash or whatever you can attend. But yeah, thanks
Definitely.
so much for
Yeah.
your time, Rob. Before you duck, do you want to just give the listeners a sort of handle as to where they can find you and AnchorWatch?
Yeah. So you can anchorwatch.com if you want to sign up, learn more on the mailing list. I'm Rob at anchorwatch.com if you want to shoot me an email. I'm Rob1Ham on Twitter. Rob at primal.net/Rob if you're looking for Noster. Yeah, looking forward to chatting with you guys.
Brilliant. All right, thank you so much, and we'll see you.
Awesome.
Cheers then.
See
Bye.
ya.